Hey traders, I wanted to go over my results for this past week. As everyone knows, it was a pretty rough week trading with the big drop we had on Thursday. But I'm always getting questions from people: how well does this strategy hold up in a down market? Some people have said, won't you blow up your account if you have positions that drop, more than 10% in your account? And so I just want to kind of talk through how I was able to trade this week and get out with a profit this week and not have to take any losses, just to show you, again, how this can hold up in a down market. Now, granted, a huge drop in the market could force you to take some losses, but even a drop like we had on Thursday can allow you to still stick with your trades and not have to worry about closing anything out for a realized loss. So if we look back at the trade alerts that I sent last Friday on June 5th, so this was the alert I sent out. You can see that I put on 6 trades. Here were the trades: Citi, Chewy, Etsy, GEOS, Lyft, and WDC. So looking through the trades, you can see that for Chewy, I was able to close it out in 2 days. Again, these are trading days, not counting the weekends. My initial credit on that was $550, and I closed it out for $260 for a total profit of $290. Chewy had earnings on Tuesday, so I had intended to hold it through earnings, but since it went up a good bit on Tuesday, I decided to go ahead and close it out since I could go ahead and capture, over half of my initial credit. And, even though I was comfortable with my strike price at 41, because the stock I think was trading around 49 when earnings came out, I just didn't want to hold and take that risk if Chewy did drop significantly from earnings results. So I decided to go ahead and take it off. Otherwise, I would have kept it on if Chewy hadn't have gone up like it did on Tuesday. You can see Etsy, I was able to close it out as well after 4 days. I was initial credit was $500. I closed it for $90 and got a $410 profit. Lyft, I was able to close it out after 5 days, so I had to hold it all the way until expiration day, which was the 6/12. Initial credit $500, closed it out for $100, profit of $400. And then Chewy actually got into it a second time after the earnings came out. So the day after earnings on 6/10, I got back into Chewy and held it till expiration. So it was a 2-day hold. And I initially got a credit of $500, closed it out for $150, total profit of $350. So my total profit this week was $1,450 based on the trades that I closed and could realize those profits. Now the other 3 stocks that I had put on June 5th, I was not able to close for a profit because the stocks had dropped below my strike price. And as you know, I always roll my trades that are in the money so that I can give myself more time for the stocks to recover. And when I'm rolling a trade, I don't consider the profit until I have completely closed out that trade from rolling. So you can see with WDC, when I put that trade on at 6/5, I rolled it on 6/11, which was the Thursday when the market dropped. And my initial credit was $450, but I don't count that $450 as a profit yet. So I show the profit as 0 because I don't know how much of that I'm going to end up getting to keep, because I don't know what I'm going to close this trade out for yet, right? Because I rolled it. So I rolled it on 6/11, and here's the roll trade, and I was able to roll it down a strike price down to 45 to next week's expiration, and I got another $410 on this trade. So when if next week, if I can close this trade out, I get to keep the initial credit of $450 plus the roll credit of $410. So I'll have a total profit over a 2-week period of $860 on this trade. Again, assuming that I can close this out next week if WDC comes back above 45. If it doesn't, then I will roll again and hopefully get another nice credit and keep doing that until the stock recovers. For Citi, when I put the trade on, my initial credit was $410, but since Citi was below my strike of 55, I rolled it, and here's the roll trade, and I was able to roll it down to 53.50, which is a nice roll. So I actually got to roll it down 1.5 and got a credit of $30. Right, so not a big credit, but I gave up some of the credit to be able to roll the strike down to 53.50. And then if we look at GOOS, I initially got a credit of 500. Here's the roll. And when I rolled it, I kept the same strike price because I couldn't get a credit if I dropped the strike price. I would have to pay a debit to say roll it down to 25. So I kept it at the same strike and got a credit of $120 to do that. So again, next week, if the stocks are still trading roughly where they are now, let's take Citi for example. Here's a chart on Citi. Right now it's at 52.25 and my strike is at 53.50, right around this area here. If Citi is still trading around 52 next week, or maybe even if it's trading at 50, I'll just roll again and hopefully I can roll that strike down from 53.50 maybe down to 52. And the week after, maybe I can get it down to 51 or 50.50. So I keep rolling to try to get my strike price below where the stock is now so that I'm back out of the money and then the option will expire worthless and I can be completely done with this trade. And the reason why I'm doing this is because if we look at the actual trade themselves, you can see here in the center where you see these three trades that are in red, these are the trades that I rolled. And if we look at Citi, as I've mentioned before, a roll consists of two trades. You're closing out the initial trade, so that trade that I put on back on 6.5, where I got a credit of, so if we look at Citi, so I initially got a credit of $410 when I put that trade on 6.5. Well, now it's costing me $2,610 to close that trade out. So if I would have just closed it out and didn't roll it, if I would have just did a buy to close, I would have lost roughly, $1,600, $1,700 on that trade if I'd have just closed it out and to be done with it. And maybe that's something, I would have considered if I thought Citi was going to continue to drop significantly or that it may take it a long time to recover. Because again, keep in mind, just last week I made $4,000. So, it wouldn't be that big of a deal for me to give up $1,600 to just be out of the trade and be done with it. And, there may be a situation where I have to if I'm in a margin call, right? If my buying power goes in the negative and I have no way to get out of that margin call, then I may would have to close that trade out anyway just to free up that margin. But again, it's not going to be that painful when you consider how much I was able to make in the last few weeks. But I did not want to take that loss because I'm comfortable waiting for Citi to recover, even if it takes it a few weeks. So instead of just closing this out for a loss of $2,160, I was able to roll it to the next week and get a credit of $2,190. So that credit that I'm getting by opening a new trade for the next week is going to recover all the losses that I'm making for closing it out, plus I'm going to make an additional $30 by doing that. So this, by rolling it, it's basically just giving me more time, and that's why if we go back and look at the trades, the way that I group my trades, I look at rolls, I look at this as being all one trade. Now, some people will consider these being separate trades, and they may go ahead and account for the profit they received on that credit. I don't do that because I don't know, again, how much of that credit actually I'm going to get to keep when it's all said and done. So I don't show a profit on my initial credit or on the roll itself until I'm actually able to close this trade out and be done with it, and then I will add up all my initial credit and my rolls to determine what my total profit was on this trade. Because again, I just see this as being one trade where initially I was giving myself until 6/12, and since I didn't, since the stock dropped, I'm basically giving myself more time by pushing it out another week. So I'm just looking at it as if I'm extending my initial trade, not so much that I'm putting on another trade, if that makes any sense. So if we go back and look, the same thing with WDC and GEOS, right? Like WDC, it would have cost me $1,500 to buy that one back. So that would have been $1,500 minus whatever my credit was on that one. Let's say I got a credit of $500. I would have lost $1,000 on WDC if I were to close it out and be done with the trade. GEOS, I would have lost probably close to around $2,000 on that one if I would have closed it out and been done with the trade. But by rolling both of these, I was able to get more credit. I got a really nice credit on WDC, $410. So again, I'm sticking with the trade. I'm waiting for it to recover, and then I'll be able to realize all those profits once the stocks recover. Also, I sent out an email, a trading recap for Thursday when the market dropped. And I'm going to leave this up because I think it's important for you guys to read, especially the additional comment section. So you can pause the video and read this first portion, and then I'm going to scroll down to the additional comments so that you can read this as well. And I'm really just talking about what the risks are with selling puts, and how important it is to manage your buying power and to not overextend yourself and things like that. So I think this is something that would be good to read. And then on Friday, I sent out another trade alerts. So this is the trade alerts that I sent on Friday. And you can see I didn't open up any new positions, again, because I've got 3 positions now that I'm having to hold on to that I rolled. And I want to give myself enough cushion so that if they do continue to drop next week, I won't have to worry about being in a margin call. So right now I'm only using about 65% of my buying power. And I probably will not add any new trades until I can close out one of these trades, or to where the stocks will start coming up closer to the strike price. And again, if you want to read the additional comments on this one, I'm just talking about the Chewy trade that I had, and how I was kind of frustrated that I didn't close it out early that morning when I could have closed it out for the majority of my profit. Again, it's always good to try to close your trades out early if you can capture the majority of the profit, and I did not do that, but fortunately I was able to get out of that trade later in the day. So if you have any questions, let me know. If you want to get on the trade alerts, let me know. They're free. You can just email me, mark@premiumtrader.com. I'll have it in the description. I should have everybody on the list. If you sent me an email before noon on Friday, you should have gotten this email when I sent it out, because I had everybody added to the list by noon on Friday. So if you did send it to me before that time and you haven't received any alerts from me, let me know. It's possible that it fell through the cracks and I didn't get you added. If you sent me the email after Friday at noon, then you should be on the list for my next trade alert. Also, I appreciate it if you guys would like the videos. Just it helps it get more visibility on YouTube, and hopefully can get more people interested in options. And hope you enjoy the rest of your weekend.